Ladies and gentlemen of the crypto space, we're live on a Friday at 11:27 a.m., November 27th. After yesterday's massacre, we are still here. What is that? That's Matrix when Lawrence Fishburne was up on the thing, the podium inside when they were dancing and shit and partying, and he was like, "We are still here." You goddamn right, we are still here. Ain't fucking nobody getting us out of here. This is our financial freedom, ladies and gentlemen. These boys in government think we're reliant and dependent on their paper shit. You know, there was a time when it was honorable and noble and awesome and impressive and patriotic and wonderful and all those good things to talk about. The American fiat currency, the American financial system, the American dream. Fuck that now. They went and fucked it up. They're greedy ass bankers and greedy ass Wall Street. Man, these corporations are so cutthroat nowadays. Listen, if people see my tweets, I am harsh on a company called Namaska Lithium. Those fuckers went bankrupt. They had very misleading marketing. One, they went bankrupt and they cut out all the retail investors, and they were able to liquidate to private corporations, paying nothing on the dollar to retail investors. So the point being, it's so cutthroat business, the legacy financial system. There's no honor left in it at all. So I like to think that at least the crypto space, it's not about honor, it's not about greed, it's about not fiat, not the legacy financial system. It's exit the system, ladies and gentlemen. That was my introductory monologue. Welcome. Today's episode, as with all episodes, is sponsored by Change Angel, non-custodial swap exchange. Stop depositing on exchanges. If you're gonna trade on a non-custodial exchange and or DeFi, please. Today's topic, Bitcoin hopes and dreams crushed by the U.S. Gov. Because that's what they do. They want you to fucking comply. Pay your taxes, bitch. Just pay them. And go to work. Get your ass up at 7 o'clock. Go work 2 jobs. We don't even want you to work 1 job anymore. The U.S. government's like, yeah, go work 2 jobs, bitch. That's what the government said. The government said to you this morning, suck it up and go get a second job. So you're going to listen to the government? I mean, it's at some point you got to pay your bills. So, just stop over leveraging, stop taking on too much debt, and focus on ways to get recurring revenue streams. And that's what we're going to hit on today. Particularly because of the market meltdown yesterday, we're going to focus on recurring revenue streams. That's how we started this stream out strong, more towards the middle of the year. Who's in the stream? We got Glenn in the house. Craig, always a pleasure. Staff, my man. Frank, yes, yes. Let's pop it over to the main screen and see what's going on. All right. Let's clean that camera. Doesn't like gray shirts. I gotta stay away from gray and green. Let's look at the anything interesting? No, not much. So this morning I was talking about, obviously, Bitcoin. Bitcoin looks good. So I was hoping for Bitcoin to stay above the top orange line, which is 17,283. 17,283, if you zoom out to the monthly, is a previous high back in 2018, January 2018 weekly high. And that's a beautiful top. If we stayed above that orange line, that would have been mega bullish. But guess what? We're literally staying above the second orange line. The second orange line is the top for November 2nd. We're in November. It's the same month. We turned a previous resistance into support in the same month. This is freaking bullish. This is a bullish chart, ladies and gentlemen. See, the fallacy is that as the price goes down like 2,000 points, $2,000, humans don't operate on time scales of long time scales. Our brains are processing in seconds. Our brains are interacting with things in real time. It's difficult for us to even plan, sometimes 12, 24 hours. We use calendars and other archaic means of time coordination. So the second you're talking about days and weeks and trying to put that into perspective of something our brain could compute, it's not something we've been evolutionarily designed to process. So it's outside the norm, it's outside intuition. But graphs and mathematics have allowed us to present such long-term trends in what I would say is a visually digestible way. Now, this is so obvious that I slapped a nicely colored orange line so we could visually digest the long term trend that's playing out here. This shit, yesterday's crash just bounced off a resistance that we created the same month. This is straight up. It's really cool to see. It is really cool. I wish we had more data. I bet this would just be a fat trend straight up. In fact, depending on how it opens next week, I mean that's the trend. It's basically that's the trend because it bounced off this. I'm just saying. I'm just saying this shit is bullish. That's all I'm saying. We didn't even go down to this orange line. What was this? This was why did I draw this? Let's go back to the monthly. Yeah, so this was the monthly June of '01 of 2019. June of 2019 was the monthly. Look at that. Look at this wonderful data. Look at this. You think this is hard to perceive on the weekly. It's hard to perceive on the daily. But look at the daily. The daily's nice too. You can see the clear support there. I wish this daily closed higher. It didn't. And we're in between these two. So we're going to see some ranging action. And this is where alts could pop in the meantime. I mean, look at the Stoke. The Stoke is well into oversold, and we're well above the second orange line of support. So we're well above support, nearing oversold, unless there's like a systemic event. It's not going to have enough momentum to push through that kind of support that was tested yesterday. Well, that's the bottom line. Then we'll see where it goes. Let me get rid of this. Let's go back to the monthly. So I was saying, if we can't hardly perceive the daily, let alone the weekly, dare we pull out to the monthly? This is the entire Bitcoin chart, the history of Bitcoin, pretty much. I mean, meaningful Bitcoin, 2016. It was such small numbers back then, and $600 was relatively small. I myself remember getting in much earlier. I bought Bitcoin for $280. At 23 Bitcoin for $280. And the funny thing is, I sold that Bitcoin on Overstock. I purchased sheets. So me and my wife love to joke that we have the world's most expensive bedroom set. We have a bedroom set that costs $15,000. That was like a Bitcoin and a half, I think we spent on the bedroom set back then. Like $500. I ended up getting rid of the 23 when it was for 100% profit at 580. Yeah, I fucked that one up, boys and girls. But yeah, I'm just saying. So I was in way before this. My crypto experience was 280. Where are we? Gemini. Gemini wasn't back then. BTC USD. Let's go to Trex. No, I think they started even more recent. Yeah, their dollar started in 15. You'd have to go to like Poloniex. Oh my God, I'm going back in time. Where's Poloniex? Because Poloniex was the hot exchange back in the day, right? That's Tether USD. There was no Tether back then. There was no Tether back in 2014, 2015. Oh my goodness, those are the good old days. But anyway, I love this monthly chart on Bitcoin. We swapped over to Bittrex, and that's about it, all we could really look at right now. This is really nice to see. And I think over the next couple of weeks, we're going to see probably another dip, something like this. Kind of even draw on the monthly chart. We'll see another dip and then another rip. And that's kind of like a cup and handle or a handle and a cup. Some shit like that. I don't know. All I know is that looks good. Let's go over the curve for a second. I wanted to show you this, guys. So I do stuff like this quite often. Oh no, where'd it go? Where'd it go? And then I'll go like this, and I'm like, Like, oh, it's gone. I call it an aberration. So it's a period of time where the trend formation breaks down, but clearly we're back in the trend because we've hit trend support and trend resistance twice. You see that right there, two hits on the top and the bottom. So that's absolutely fascinating. Let me look in the stream real quick, and then we'll get back to this chart. Can you have a look at Ren? Staff, I'm going to look at Ren. You damn right I'm going to look at Ren. Simon says, when should I enter Bitcoin? I accumulate Bitcoin. Fuck dollars. Fuck fiat. Accumulate Bitcoin. If you're saving money, don't save it in dollars. Save it in Bitcoin. And that's how you'll win. Charlie, always a pleasure. Gobble, gobble. Yes. Awesome sauce. Welcome. Always. Staff says, don't you think the stochastic is more of a momentum indicator rather than overbought, oversold? I think the stochastic is more of a velocity and momentum. So I guess that's right. Whereas like MACD tells me direction. But you know what? Better than momentum, I like the word pressure. It tells me how much pressure is left to travel in a particular direction, up or down, and that's what I see it as personally. Uh, the sheets, Charlie, they're the most comfortable sheets ever. Go to BLX for the history way back. Oh, Brave New Coin. Oh, those are the days. Oh, look at those days, boys. 2014. Oh, look at that. Look at those. Look at that. Look at this rip. Look at this Oh, look at that monster rally here, guys. A giant rally. You know what rally this is? This is 2017. Look at this 2017. No, it's not. It's 2014. So let's zoom out and see what 2017 looks like. Whoa. It kind of makes it look tiny. So what do you think is going to happen in 2021? I mean, this rally was huge here, guys. Look at that. We're zooming in on this little tiny little blip. But that tiny little blip took us from 50 cents to 10, $30. Oh my God. What a rally. What a rally. And then there's that rally. $14 to 200. These rallies are incredible. And they just get bigger. 114 to over. That's a 10x rip. We're not going to go through all of them, but it's crazy looking back at the historic price action of Bitcoin. And all I know is I have no interest in fiat. That's all I know is if you're going to save any money this holiday season, if you're going to put some cash, you get a paycheck at the end of the week, and you're going to throw it in a bank account. For me, I would take the vast majority of it and I put it into Bitcoin, and I take my couple $100, I throw it in the bank account, 100, 200. If I had $1,000 that I was going to save on a monthly basis, me personally, I take $800 a month and I put in the Bitcoin. $200 a month goes in the fiat, and obviously you need a certain amount of money in your bank account to cover bills. Because all these schmucks out there and all these companies, they're like, I'm going to take dollars. I'm going to take the garbage. I'm going to take the currency that nobody wants to save. I'm not going to take the most value strong or value preserving asset there is. I'm not going to accept crypto. I have no idea why I'm not going to accept crypto, but I'm going to accept the garbage. Fiat. The last bag that nobody wants to hold. Every company in this stupid country accepts. They don't know any better. They don't know any better. Doubleday says, will mergers like Wi-Fi and Pickle and Cream, dude, that merger, Andre and Bantag, those are some smart boys. I think, it's not that we're on the verge of something because we're seeing it play out in real time, but what they're doing is straight up like Steve Jobs garage type shit. I hope you all see that. Because we're like, back in the day, that stuff occurred in a garage in someone's home. Nowadays, it's public and on the internet. What they're building right now is some straight up Steve Jobs in the garage type shit. Wozniak, he's still around. Woo! That's, Steve is Andre and Wozniak is Banteg. Just saying. That's what's going on. That's the type of technology that's being built. Groundbreaking, disruptive technology that makes the legacy financial system pathetically antiquated. That's real. And it's obvious. It's obvious. The writing is on the wall. So on the wall. Uh, Peter Stover, yeah, but Bitcoin has no intrinsic value. So what is intrinsic value? We're not going to get into the philosophical conversation, but in short, I'll say that it's everything that we interact with is a construct of psychology and philosophy. And I'd be fascinating to see what the historic philosophers, or even just the modern day philosophers, think of crypto assets and money and financials and how they're all related. I'd love to see a conference including psychologists and philosophers about crypto and the big picture they see. Because all of this shit only has value merely because someone else wants it. It's all about supply and demand. It's all about consensus, agreed upon, shared value. And you know what it reminds me of? Language. Semantics. It reminds me of the meaning of words. The only way I could communicate with you folks, I'm not going to get too deep on this because this is some rabbit hole type shit, is because you have a definition on the words that I'm using. And the definition that you have is pretty much the same that I have. So when I say something, you're like, oh, I understand what you're saying. It's a word that I've used before. It's a word that means something to me. And it basically means the same shit. So it's kind of like money. Its intrinsic value is when it has shared semantics. Like it has the same value to another person. It's like a word having the same definition to another person. So when a word has the same definition that another person has the same definition for words, we're able to communicate. When another person holds the same asset and the same value, it's got fucking value. So that's the intrinsic value. The intrinsic value of Bitcoin is chicken and the egg type shit. It has value because other people think it has value, and because other people think it has value, it has value. There's no magic here. People saying there's no intrinsic value to Bitcoin. That shit's crazy. That shit's crazy. All right. Digibyte says, all I do is hodl. That's all you got to do is hodl. Now, bear in mind, there's reason to restructure your portfolio, to make moves, to make changes. But personally, I have not had to. So if you have been preparing, if we've been talking enough the last couple of weeks and months, we've prepared and tweaked our portfolio for optimal yield, for protecting our gains. And that's what our goal is. I mean, obviously, if I'm seeing something hot, I'm seeing something overt, which I've said before, when I see the 24-hour sort on CoinGecko and there's obvious opportunity, you could go risk on a little bit. Take a little something and make a little gamble. You can make 20%. And that's what I did this summer. So now I'm completely risk off. I'm risk off, boys and girls. I got my Bitcoin position in lock. I have leverage positions from MakerDAO. I'll tell you guys what I got. It's easier that way. I got 7.5 up in MakerDAO. I have another 7.5 on Celsius, 5 on Celsius, and 2.5 on BlockFi. So that's pretty much the vast majority of my Bitcoin. And I'm leveraging $40,000, which I put into Curve, which gives me a whole bunch of CRV yield. So I turn that into VECRV. Right now I have REN selected. But the point is, a bunch of rents VECRV. I've been using the ape tax, Andre and Banteg's vault. This thing is ridiculous, guys. This thing is giving you 1.5 times on your money. You get, for instance, if you're putting your CRV into VECRV, you're getting 1x. Frankly, it depends. You might actually get less than 1x depending on the time frame you have selected. If you select for 4 years, you get 1x. But here, you're getting 1.5. This this is leverage. This is some serious money, boys and girls. And I'm just zapping it, zapping it, zapping it, zap, 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 zap. I guess what? In 3 days' time, the announcement was this morning. We're going to start to get our 3CRV yield. Yeah, I'm excited. I am very excited to start getting yield. I think I have a couple $1,000 due to me from my VECRV position, and probably maybe a couple hundred from here. It's only 2,300, but I have like 30,000 up in VECRV. It's pretty cool. So I think Curve is an asset to accumulate, and obviously I like Keeper Dow. Price has been beaten up. Let's go over to the Gecko. So 68. I have my original entry at 77. I know folks that got it much cheaper, but I saw it go up to 220s. Sold a bunch at 170s, and then back at like 125. I moved it into a Uniswap F liquidity pool position. So obviously I got some profits because I sold at the 170s, and now we're back at entry pretty much. But I've offset losses with the liquidity pool position, which has accrued an additional 2 Rook and 0.28 Ethereum, which is pretty cool. So obviously, as the price increases over time, so this would have been lower. So that's the thing. Impermanent loss is kind of also the other side of the coin of risk loss mitigation. So you minimize your losses by being in an impermanent pool, but you also dampen your potential gains by having impermanent losses. So liquidity pools are cool like that, and that's in fact rather than no, that was the good choice. So it was a good choice to put it into Uniswap, and I'm just going to keep it here. I don't mind whether I have Rook or Ethereum. I think both of these assets are going to seriously outperform the market. And if Rook goes through the roof for 10x, 100x, I don't mind if this is a Ethereum heavy pool, because Ethereum is going to pull a 10x also. And if I end up having like 20 something Rook and it's worth 5,000 a piece, I don't mind. I'll lose 50%. I'll have 50% impermanent loss, and I'll miss out on half the potential Rook gains. But I'm also minimizing my risk. I'm minimizing my downside with the liquidity pool position, and that's the bottom line. What am I missing? I'm missing a lot. David says, do you think Digibyte will replace Bitcoin? Absolutely 100% no. Not even remotely possible. Love Digibyte, that is not even possible. Peter Stover, yeah, that would be nice discussion, my man. It's just the truth. It's not possible. Bitcoin is what it is, not because it's technologically superior, but because it is what it is. It's a self-fulfilling prophecy. Invest in what is, not what may be. Ren says, any thoughts on DigiAsset X and Digibyte? Yeah, mega bullish. DigiAsset X, DigiAssets is the platform. That's what's so powerful about Digibyte. Record storage and asset management. And frankly, I've been saying it for years now. All that needs to be done with Digibyte is for it to be used. The platform, the proof of work, the algorithms, the 5 algorithms, and just the parameters of a fixed block timing with the dynamic every block difficulty adjustment. There's nothing like Digibyte from a protocol perspective, and I'm talking from a developer consideration. So yeah, that's mega bullish, guys. David says, it seems to me that Digibyte can do everything other cryptos can, but better, faster, and safer. Yes, but here's the most important thing for you to consider. David, just because it's better, faster, and smarter than everything else does not mean it's going to go up in value. And that's what I've learned as an engineer, and that's what I've learned and try to teach people as an investor. The power of a technology, the awesomeness of a technology has absolutely no business and nothing to do with investing. Invest in things that are actually performing. Invest in things that you see today. Assets have price action now. Invest in now, not in what you hope and dream to be. Yes, so that's it. And if you're going to speculate, so I'm speculating with Rook. I'm speculating with Digibyte. I have probably just a smidgen more value in Digibyte than I do in Rook. but it's maybe 1% of my portfolio. These are max risk assets. Digibyte is a maximum risk asset. Rook is a maximum risk asset. You want a minimum risk crypto asset? Bitcoin. That's the minimum risk crypto asset. Uh, that's it. And then what you could do from there is you take your Bitcoin and you mitigate the risk to the downside by having a very over collateralized maker DAO position. You take basically you do the same thing and you're getting 40% yield on DAI from Curve, and now you're getting gains off your Bitcoin, and that mitigates your downside price action. That's the name of the game. Um, a roundtable of people on acid discussing Bitcoin. That's right, Peter. That'd be some shit. Igor says, "Hey Noah, when the government legacy system will quantum computing available?" We'll get to it. There's a lot of smart people, a lot of people that are much smarter than me dealing with crypto. And quantum computing and the algorithm adjustments that are required to mitigate potential failures in the fundamental protocols. That's just the bottom line. Uh, Digibyte is better store of value than Bitcoin. No, I don't know about that one. It's just, God, I don't want to talk about XLM or XRP. And can run smart contracts just like Ethereum. No, Digibyte runs scripts. It doesn't run Turing complete smart contracts. Digibyte runs scripts. Digibyte is just like Bitcoin. Digibyte is not like Ethereum. Very different. Bitcoin runs scripts, the same scripts that Digibyte executes. The difference is that Digibyte is fast and has fixed block timing. Bitcoin doesn't. You can't do shit with Bitcoin. You can't run a business on Bitcoin, but you can run a business on Digibyte because the blocks are every 15 seconds. It has deterministic block time. That changes everything, ladies and gentlemen. Digibyte is really meant, or very well structured for use in corporate and business networks because it has fixed block timing. You need a deterministic network to operate a business that you know exactly when a transaction is going to complete. That's so cool. That's so cool. Digibyte just needs liquidity. Yes, and many assets need liquidity. Many assets need liquidity. You're absolutely right. I love guys. I love Digibyte. I think Ripple has a big place as a technology. Listen, tech has nothing to do with price action. That's all I want to say. I don't want to dwell too much on these assets. There's a lot of stuff and a lot of comments I want to get to. But tech has nothing to do with price action. It's mutually exclusive. You can have the best tech in the world and it's going down, and it's going down, and it's going down in price. And that's kind of what just happened. Digibyte went down in price. Ripple went down in price. Great tech, down in price. I mean, even Bitcoin is going down in price. So anyway, okay, a lot of Jerry, hey Jerry, always a pleasure, my man. I'm happy to do a stream with you. I'm happy to talk here. I'm happy to talk everywhere. I like to talk. My wife says I got a problem. I think I do. Peter says never go all in and never spread too thin. That is the most important thing, and these are the types of strategies that I think about. Never go all in. So don't go. You make maximum risk. So bear in mind, Warren Buffett, you need wealth concentration in order to make your big bucks. But that's also maximum risk. So really what Warren Buffett has taught us is that in order to actually get anywhere, you got to take a big gamble. Because once you get enough critical mass of value, because then you're able to break down a portfolio and you're able to spread it around into some yield-bearing assets, some high-risk assets. Because when you have a smaller portfolio, it takes a lot of very high percentage gains in order to get past the critical mass so you can break it down into smaller components. Very tricky. It's very tricky. So I guess the best way to describe that is going from 1,000 to 100,000 is much harder than going from 100,000 to like $10 million. Ledger has a 40% discount. Oh, hell yeah. Yeah, I'm happy to talk about Ledger. I got my Ledgers. Frankly, interestingly enough, the Ledger Nano X is awesome. It has so much memory, but the Nano S I find so much more stable with regard to my Mac. Just saying. Just saying. Max risk, max reward. Michelangelo says, no, no. I want min risk, max reward. I want to take the least risk possible. What I want is yield. What I want is gains. I'm talking this. This is what I'm talking about, min risk, max reward. I'm dealing with two smart contracts right now, a WBTC and particularly RenBTC, because that's how I got my value into WBTC. I was able to convert 7.5 Bitcoin into 7.5 WBTC. So I have the risk of BitGo and the WBTC contracts, the risk of the MakerDAO contract. So there's my risk. And be with MakerDAO, I've leveraged $40,000 in debt, over collateralized 314%. So if Bitcoin went to $8,000, my account would be liquidated for a total loss of 13% plus whatever the difference between the auction price of my assets. So this is why I very over collateralize. What's the odds of Bitcoin going to $8,000? And that's my risk analysis. I don't think it's going to go there. So I have $40,000 leverage on top of $126,000. 4812, that's about 30% leverage, give or take. And of this $40,000, I have the vast majority of it in Curve, which is currently yielding I got 26% on this pool, so 26%. So bear in mind, that's really 26%. So the question is, now you're asking, where's that yield coming from? That yield is coming from the Curve asset, and that's an inflationary yield because Curve is a governance asset that's being emitted from an asset that has a current circulating supply and a max supply. So 26%, that's real, because the value of the Curve emitted has that amount of value on the open market. Now, bear in mind, as Curve is emitted, you have dilution. So these are real factors. But the point is, this is a position that I'm paying 4% to have, and I'm yielding 26.72% currently. And you could dive into how sustainable it is and for what longevity, what period of time. But that doesn't matter because this is what it is today. And as I keep telling you guys, you trade and you invest based on what you have today. And tomorrow the numbers change. You adjust your portfolio accordingly. And what this is called right here is a carry trade, ladies and gentlemen. I am making more than I am paying on interest, borrowing debt. If the carry trade fails, I adjust my positions accordingly and I exit the carry trade. Very simple. Minimize risk, maximize yield. Let's keep it going. Let's keep it going. What am I missing? I'm running out of time. Michael says Digibyte is better than Bitcoin. Sure, it's better than Bitcoin, but that doesn't mean anything. That doesn't mean much. You need adoption. And I'm talking about adoption where demand exceeds supply. And that's all that matters from an investment perspective. You have to ask yourself why, under what conditions will demand exceed supply? And if you see that in advance, you could potentially make a huge amount of gains. But if demand doesn't exceed supply, the prices go down. So two things. Rand still within trend formation. Love to see this. Looking good. Curve, well within trend formation. In fact, this is looking like it's a breakout. I told you guys I see this as an aberration because it literally broke back into trend formation, hit support and resistance twice. Bitcoin looks ridiculously bullish as we talked about. Let's go over to as many assets that I can get out of my mouth in the following couple of seconds. Let's not go into Tesla because this is the legacy financial market and this is absolutely disgusting. A P&E of 1,000. Let's look at Ripple because that thing exploded to the upside, but obviously it has its pullback. This looks really good because of where it hit on support and resistance. Look where it is. This looks great. Look at the guppies on the 4-hour. So obviously it gets extremely overbought with irrational exuberance, as with all crypto assets. And that's even more so now than it was in 2017, particularly because the supply, the circulating supply, has increased by the tune of billions of assets. But that's okay. There's nothing necessarily wrong with a very much increasing supply, as we've seen by curve. All that matters is demand exceeds supply. And if demand exceeds supply, the price goes up. And as you can see here with some serious green guppies, demand is exceeding supply. So the whole trick is to minimize your risk to the downside, never spread too thin, and never go all in. Position sizing, don't take on too much risk. And that's the name of the game. There's no reason you can't take on some risk. And this is a risk on asset. That's the most important thing. Just like Digibyte, just like Rook, just like Ren, these are risk on assets. And this is a traditional financial concept. If you want risk off, crypto space risk off is Bitcoin. It's bear in mind I say risk off predominantly because Bitcoin nowadays ties into the global financial system um, at so many levels, and it's so well elaborated how it ties into the global financial system by folks like Michael Saylor and Raoul Pal. And these boys put the puzzle pieces together very well. Now, these other assets may very well in the future, speculatively, which we like to think we see Ripple part of the financial system, and so many people do, and I myself see it. It's obvious from a technological perspective. But as of right now, that's not what's occurring. But that is what's occurring with Bitcoin. So you can take a speculative position, just take into consideration with regard to position sizing how much risk you're taking based on the status of an asset today. As you get too speculative with an asset, taking on too much risk. So protect your damn gains. Don't take on too much risk. That's the name of the game. I'm going to wrap it up in a second. Yeah, Charlie, it's my pleasure. Listen, I love this. If you guys have any questions to Monday's another stream, this is what we do. We've been doing this for how many months at this point? This is how we manage a portfolio. This is how we minimize our downside, maximize our upside, minimize our risk, maximize our gains, produce recurring revenue streams. Look at this. Look at this. Let's go over a couple of things for another couple of seconds. I am minimizing my downside in a highly risk-on asset by using a liquidity pool. Uniswap has offset losses to the tune of 300% in a pool that's 5%. That's minimize my losses 5%. That's incredible. You can't do this shit in the legacy financial system. I have almost $300 gains on a liquidity position of $6,000, and Rook has gone from $125 to $70 to $67. I've offset losses by capitalizing on the trading between Ethereum and Rook. And I don't care whether this pool is heavy Ethereum or heavy Rook, because I think Ethereum and Rook are going to outperform the dollar in 1 year's time. So this is a wonderful position to have. This will grow over time. This will achieve my success or my goal. Synthetics is a ridiculous asset to have. Synthetics, I think the yield is like 50%. This is all yield. I had 829 that were yielded to me because I minted SUSD back in March when Synthetics was 70 cents. Synthetics is now $3.98, 829. I'm getting about 4 Synthetics a week based on this, so that's nice growth. And this is all free. This is all free monopoly money. This is nice. Love it. Love it. And obviously Ren. I've gone over Oasis and over collateralize your position. I've gone over the ape tax. That's about it. Oh, let's look at one more thing and then I'm going to wrap up the stream. Here's Rook. This is the amount of money that Rook has made with its strategic arbitrage software and protocol. It has made $1,600,000 using provided liquidity to arbitrage the shit out of the Ethereum order book, the mempool, by front running and gas price wars and all that fancy stuff. So that's the whole point of keeper. I think this is a really cool and unique risk-on asset. There is nothing that's doing what no one is doing anything comparable to what Keeper DAO is doing. The white paper is incredible. Let me show you guys the white paper so you have the URL. You guys, if anyone's technically inclined, you're going to want to read this white paper. It's just like so cool. There's some seriously cool goals and intentions and the concepts and the psychology. It's psychology. I mean, there's no white paper out there in the crypto space that even is anything like this. The hiding game, the coordination game, the incentive game. This is a straight up game theory and psychology experiment of monetary policy. It's absolutely fascinating. There's nothing like this. Minor extractable value. All right, ladies and gentlemen, 12:07 on a Friday, November 27th. The market looks fine. It was a big sell-off yesterday, but I'm more excited than ever. Protect your gains, maximize your yield, over-collateralize your debt, min risk, max reward. Keep your position sizing well thought out, and take on risk but protect your shit. You work too damn hard for it. Protect your games, boys and girls. And I'm going to see you Monday. Smack those thumbs up buttons. Tell everyone to subscribe. I thank everyone for listening to me. It's a pleasure to have these monologues with everyone. I wish everyone a good weekend. Peace.